What's going on, investors? In this video, I'm going to be showing you how to find your target market for when you want to buy your first out-of-state rental property. If you're a brand new investor and you don't know where to start investing, then you definitely need to watch this video all the way through. If you guys are new here, welcome. My name is Sean. I'm a real estate investor, hard money lender, and real estate agent based here in the Bay Area. And on this channel, we go over real estate investing tips, strategies, and current events to help you become a real estate investing boss. Now, if you're a brand new real estate investor, probably confused about where to even start. And as a new real estate investor, it's going to be really hard for you to get over the fact that you're going to be buying in a place that you probably never even heard of before, and much less been to before. And when you're just starting out, there's also a lot of questions, a lot of risk. Like, you don't know the different environments. You don't know if you're going to be buying in a good area or not. And so by watching this video, hopefully you'll understand how to do some basic analysis to see if a market is worth investing in or not. Because surprisingly enough, just because a property is listed really low doesn't necessarily mean that it's in a good location. Now, what we're going to be doing today is we're going to be going to two separate websites. And from these websites, we're going to be gathering jobs data. And from there, we're going to cross-reference that with another website that will show us the stats for that city. That will tell us the demographics, population growth, income growth, home growth, and all this other good stuff. So let's hop into the data and check it out. So the first website we're going to go on is the departmentofnumbers.com/employment/metros. This website gives us a good glimpse of what the jobs are doing in an area. And this is important because when you have more jobs in an area, then more people will go there for those jobs. More jobs also means that there's going to be more competition within the local employers in that area. So people are going to be paid more. And when people are paid more and there's more people going into it, then there's less supply for housing, which means that rents will increase and your property value will increase. So basically, jobs are the leading indicator that you're investing in a good market. So make sure you get into a place with a lot of jobs. Now, what I like to do when I go to this website is I like to sort it by the 1-year CES job percent change. This tells me the difference between last year and this year and how much it's grown. Now, if you click it one time, it'll sort from worst to best. So let's click it again and I'll go from best to worst. Now, these numbers are highly unusual. You see here that there's a 52% change in jobs from last year. Now, the reason why it's so high is because of COVID. Last year, this place, Elkhart, Indiana, probably lost a lot of jobs due to COVID. So right now, there's a lot of people who are coming back. And this number doesn't necessarily mean that this is like some amazing area with, infinite job potential. No, it's just recovering back from COVID. So when you're taking a look at this for at least the next year or so, take it with a grain of salt. Okay, this strategy works, in 2019, in 2018, 2017, but because of COVID, things are a little bit different. So take a look at it, but again, take it with a grain of salt. But generally speaking, anything that's above 2% is good. So usually you want to see above a 2% year-over-year job growth. Again, because of COVID, all of these numbers are out of whack right now. They're all in like the 50s, 20s, 13% range. And again, at the very low end, you have minus 5%. So this is probably a bad time to look at this exact data. Maybe wait a few months before doing this. But at least you can see here, well, who knows? Maybe Elkhart, Indiana is a really great place to invest in. We have no idea. Let's add this to our chart. So if you sign up for our course, Remote Rental Riches, you're going to get access to this spreadsheet. It'll show you the city name, CS job percent changes, and all the different fields that you can populate. We're going to populate this here on this YouTube video. And of course, it's just a spreadsheet, so you can go ahead and just make this yourself. But these are the factors that we like to look at before going into a market. So this city name, it was Elkhart, Indiana. Okay, the CES job percent change was like 55% or something crazy. Let's go down the line and just add some more cities just to look at them. So next one is Ocean City and then Atlantic City, and they're both in New Jersey. So I'll type here Ocean City, Atlantic City. Okay, so this one was at 45% and 32%. So 46 and 32. Again, these are super weird numbers, but we're just gonna roll with it. So then we're gonna go to another website, citydata.com. So that's city-data.com. It looks pretty antiquated, but it's actually pretty good because it has a lot of data in here. So let's look at Elkhart first. All right, Elkhart, Indiana. So we wanna make sure that there's some decent population, okay? Population in 2019 is 52,000. So right here, population, let's change this to in 2019. Just copy paste here, 52,358. Okay, paste that there. Population change since the year 2000. So population change to the year 2000 is plus 0.9%. So this is telling me that over the past 21 years, the population change has only been less than 1%. This is not ideal, by the way. So we look at the household income change since the year 2000. So how much more money are they making from last time? So scroll down a little bit. Estimated median household income in 2019, $38,971. Let's populate this here. 38,000 in the year 2017, or I guess 2019. Let me update these charts real quick to reflect these new values. 2019 here. And let's see, 2020. So in 2020, it was $34,000. So let's go here, $30,000. So if you do the calculations here, right, this number minus this number and then divided by this number again, that's going to give you the percentage increase. And we have seen that based on these numbers, right, from 38 to 34, you've been increasing by 11% from the year 2000. And honestly, this is not satisfactory. Like, you would have hoped that they made more money since the year 2000 and at least, more than 11% over those 21 years. So if we keep going and looking at the median household value, an estimated median household value is $106,000. Okay, paste that here. And it was $74,000 in the year 2000. Let's paste that here. So it looks like home prices grew by 43%. That's good. Home prices have increased from 74 to 106. If we look at the crime by scrolling down here, so you can get all this different demographic data, even street by street. So it's really cool. If you really want to look at the market, you should definitely do more research here. But right now we're just getting like the 5,000 foot view to see if it's even worth going into this market in the first place. So back in 2006, the crime rate was at 606. Again, these numbers are all relative. And the higher it is, the more crime, and the lower it is, the less crime. And you can see here, here's what the numbers kind of are comprised of. So 606, let's type it here. And the crime in 2018 is 490. So that's good. Crime has gone down. So what do these colors mean? Well, these are more like flags just for us to see really quickly at a glance if it's worth investing in this place. And these reds here basically mean that they don't really fit our criteria. Like, we're trying to get in places that are, $40,000 or $50,000 in household income on average. Otherwise, it's kind of too poor, and usually in the poorer areas, you have more crime and more issues. So we want to see this number a little bit higher. We also want to see a household income change of around 20%. Like, you hope they made more money over time. So here is a kind of prime example of when the job growth is so high, it doesn't necessarily mean it's a great place to invest just yet. Let's look at another city. Let's look at Ocean City and then Atlantic City. All right, let's look at Ocean City next. And you notice here at Ocean City, the population was only at 11,000. So that's already too small for us. And here you can see population change is negative, minus 28.7. Like, we want to see that people are actually moving into the neighborhood, not moving out. And on top of that, I can see from the map here, it is like way out, kind of coastal. And I don't know if this is something that we want to invest in just because, who knows, maybe there's some issues with the water and whatnot. Household income has increased. Wow, it's almost doubled. So that's pretty cool. Doubled from 44,000 to 84,000. But let's go ahead and just fill in the spreadsheet just so we can have it all right there. All right, so population is 10,000. Population change is minus 28%, which is not really good. Household income is 84,000 right now. And it was 44,000 before. Wow, property values have actually increased significantly. It's now at 613, whereas before it was only at 215. If we scroll all the way down, it was from 341 to 141. So honestly, this place wouldn't be too bad if there wasn't such a low population growth. You've seen here that the home prices have increased like crazy, the household income has increased like crazy, and the crime rate is super low. So this is actually a pretty nice area to be in. Now, another thing that would probably ruin it for me is that these purchase prices are just too high. An average of 613, it's gonna be really hard to buy a property at $600,000 and then rent them out for that 1% rule of $6,000 per month. So this right here is not something I'm gonna want. All right, finally, we're gonna look at Atlantic City. Okay, so Atlantic City, New Jersey, population in 2019 is 37,000. Population change is minus 6%, which again is not the best. It's showing that more people are leaving the place than are entering. Household income, $29,000. Again, not the best because that's really low. Going back to house value, we have 154. But it was 88,000, so that's good. It means that it's almost double the price. Let's go ahead and just drag these here to continue. Copy and paste. Okay. And we scroll all the way down. Crime, wow, crime used to be 1,093. This is probably the highest crime number I've ever seen. 1093. And right now it's at 524, but it's as of 2019. So city data is pretty much as good as you're gonna get if you want to do this for free. If you want to pay some money, you can probably get the latest and greatest data for 2020 or 2021, but it is what it is. So even here, these numbers don't look the best. Like, I would invest in Atlantic City. It's good that the median house value is pretty cheap, so you can probably get in, but the crime rate's kind of high, and more concerningly, the population has been decreasing. So when a population goes down, yeah, your property is cheap, but when people are leaving it, eventually your rents start going down, your property could potentially depreciate. Let's look at Detroit. I mean, Detroit is a very popular one that people like to look at just because they say, oh, it's like super cheap there. You hear? Oh man, 25%? Sounds great, right? Let's look at Detroit, 25%. Let's go back to city data. Detroit. And this is pretty good. You see, Detroit has 600,000 people in its population. So that's a lot of people, right? But look at that, minus 29%. So 30% less people than from the year 2000. So there's people leaving it, which is not good. All right, income, 33,000, and it was 29,526. 29,526. House change. Yikes, look at that, 58,000. But in the year 2000, it was 62. So the price actually gone down. Looking at crime, 1138, so it's very high, and now it's 759. 1138, 759. So you can see here, it's just not really worth it to invest in Detroit, honestly, unless you know what you're doing and you have like friends and family there. Because otherwise, like, you have a big population, but people are leaving, your home price actually decreased in value since year 2000, and your crime is still relatively high. We want to see this crime index number below 500. Now let's look at a market that I personally like, and let's see if the numbers stack up. So the market that I like looking at is Jacksonville, Florida. You can see there's many Jacksonville, so let's make sure we click the right one. And if we look here, let's see if we can find Jacksonville. 10.55 for job growth, so not bad. Jacksonville, 10.55. Okay. Population here, 911. So almost 1 million people live in Jacksonville. Pretty good. Population growth, 23.9%. Not bad. All right, household income change. So 56,975. So they're making some decent income. And it was 40 grand 20 years ago. So if we look at that in a percentage growth basis, 41%. Not bad. All right, home prices before, now they're at 200,000. But 20 years ago, they were at 84,000. So it's 138% growth. If we look down at crimes, it was at 512 and now it's at 377. 512 and 377. And again, the reason why you want to track this number for crime in 2004 is just because you want to see if crime is going up or if crime is going down. And generally speaking, crime does go down over time. So look at Jacksonville, like it hits green on every metric that I personally look at. And so I think that Jacksonville is a great place to invest. And that's why I do invest in Jacksonville. Now you could, and you probably should, just do this for every single metro that you see here on this jobs data site, because you're going to be able to see from this huge matrix at a glance what's worth buying and what's not worth buying. I can see right here, Detroit, yes, the median house values are very low. I can get in and buy a bunch of properties in Detroit, but look at all these other statistics. Like, wow, you're losing people, you're depreciating values over time. That kind of sucks, and your crime's kind of high. Not somewhere I want to invest. Here, for Elkhart, your population is okay, I suppose, but it's not really significant. I think we want to see above 100,000 people. Your population has increased by 1%, and your household income went up by 11% over 21 years. Not somewhere I really want to invest in. Ocean City, population's too low. You lost a lot of people, and it's super expensive to buy a property here, so not worth it. Atlantic City, same thing. Crime's really high. These are no good right here. Your household income is also not that great. Whereas Jacksonville, everything is green, and you can just fill out this entire spreadsheet, do what I did, write up the name, job percent change, population change, etc. It's pretty simple to do these calculations here. And you can find out where are some target markets that you can start pursuing. Try to find the ones where everything here is all in green. Of course, nothing here is an absolute must do. This is more like a frame of reference for you if you want to start investing out of state. So at least you know where are some good places to go. And then from there, you can start creating your teams. You can find your property management team, your agents, your wholesalers, and start getting deals and start investing out of state. If you guys want a full comprehensive guide on how to buy your first out-of-state rental property from knowing absolutely nothing to getting your first home in escrow, then check out our course, Remote Rental Riches, where we go over step-by-step how to buy your first out-of-state rental property. And we even go along with you to show you a case study of how we go about branching into a new market, cold calling property managers and agents, and getting them to send deals to us, and eventually closing on a property. We go over everything like this, like how to analyze the deal, how to find your target market, and how to build a boots on the ground team. So if you're interested in that course, the link will be down in the description below. And if you guys have enjoyed this video, please do me a huge favor and just take 2 seconds to smash the like button to let YouTube know that you like videos just like this one. And let me know your thoughts too. What do you think about our spreadsheets and how we analyze markets to invest in? Do you think I'm right, or do you think there's some different ways that we should be doing it? Let me know your thoughts down in the comment section below. And if you guys are new to the channel and you haven't done this already, please consider subscribing to see more videos just like this one. Thanks so much for watching, guys, and I'll see you next time. Take care.